Hello and welcome. This is Brandon Wendell, and I am going to go ahead and do some analysis here on the U.S. equity index futures. Starting off looking at basically a combination here of all four of the major equity indexes. You got the Russell, the NASDAQ, the S&P, and the Dow. Basically measuring these from the major decline that began on January 4th. You can see that our leader to the downside happens to be the Russell 2000. That's been the weakest market, down almost 12% from those highs, while the Dow is holding up much, much better than the rest. It's only down about 4.63%. So it's good to know which one's a leader to the downside, because when that leader hits the bottom or demand, that's when the other markets are likely to reverse, and vice versa. If the strongest security, which is the Dow, hits a supply zone, you're likely to see everything turn back to the downside. So we are kind of moving a little bit upwards as we speak. We've had a bit of a correction going on. So I'm going to start off with looking at the Dow here. And looking at that Dow and some of the strength, we'll start off with a fresh chart to begin with. And you can see that we are not in a downtrend. We've made a lower low. We did make a lower high first. So as of right now, we are impulsing down. Oops, didn't quite catch that. There we are. And as we are impulsing down, we are correcting back up. So the big question is, where's the end of the correction? We'll go ahead and take a look to see if we can figure that out. Oops, got the wrong setting there. There it is. And we can check to see. Actually, we see that we've retraced about 78.6%, almost on the dot on that weekly retracement. And on that retracement, you can see that we barely got into bullish territory. The RSI high was just barely above 50. That's actually a pretty weak retracement. I mean, even though we went deep, we didn't have a lot of bullish momentum, which suggests that we might be able to continue to move down and make fresh lows. If we look at a weekly continuous contract, just to be able to go back in history a little bit further, the next area of demand as we look back and down is going to be right here. So this may be our target as we continue to impulse downwards from this area. We're looking at about 31,637 as the first possible turning point. There might be something a little higher. Let's take a look at that. No, actually it doesn't qualify. I take that back. We have rally base, but it doesn't really qualify here. So this is the first target on the move down that we're currently experiencing. And we can even verify using the Fibonacci extensions. See if it's the same area. And you can see, yep, if we duplicate the previous impulse down, it pretty much takes us right to the top of that zone, right around 31,000. We'll call it 32,000 basically is where we're headed right now. So going back to the specific, here we are. Again, on the weekly chart, if I use the Fibonacci extension, if this is the end of that correction, our impulse is down. Number one, we've got a possible target. We are at 33,241. Second target being just underneath 32,000 at 31,789. So that is our start of our move back down yet again. And we can verify this by looking to see if there's weakness on smaller time frames. If I go down to the daily time frame, you can obviously see we put in a high and started to show weakness with lower highs and lower lows on Thursday and Friday. And we couldn't get into bullish territory here either. So it does look like we are done with the correction, maybe getting ready to continue to move downwards. Now, the Friday candle was kind of interesting. We did have a little bit of bullish pressure. You can see we closed well off the lows. So what we need to see is how are we going to follow up on Monday? If we end up following Monday by breaking higher, not making a new low, but making a higher low and higher high, maybe we're not done with our upward movement. But if we break the lows here, 34,668 on Monday, then look out below. We should be able to continue down. Just a small pause at 33,000, but ultimately heading down to 32 before any kind of meaningful bounce. So looking at the daily, I don't really see anything else different. Perhaps a little bit of adjustment on the Fibonacci impulse correction, and it didn't change too much. We got 32, 231, so a few hundred here or there on the daily doesn't make a difference. Anyway, but that's what I would look for to see if we break these lows, then that means that the leading market to the upside is kind of given up. We can drop down to the 4-hour time frame just to see if we can fine tune anything. And again, you're seeing weakness, a lot of red coming in. We tried to hold up with some bullish pressure on these candles, but there again, we've got selling pressure creeping back in on the very last candle from Friday. So if we open up and break down, then we're likely to continue to go lower. Got kind of a weak demand area here. I say kind of weak because you only have one leg out and only a little bit of follow through, not very powerful. So we could pause there on our way down, but ultimately for the move down, I'd be looking at the strong index to the downside, which is the Russell, to let me know where we're going to bounce. And there's nothing on the 4 hour below this as far as any kind of demand. So yeah, just go back. I'm gonna have to use a continuous to see anything else, but right now I think we might get a little pause at 34,563, but ultimately keep going down. If I drop down to the 60-minute time frame, let me go ahead and clean this up a little bit here. And all basically we did was retest this high. Once again, I'm going to clean this chart up. Where is it? Lost my mouse there. And yeah, as I was saying, basically, you see there's a rally base drop that we use as supply. Could not get above 60 at all. It's still extremely bearish altogether and looking like we're going to continue to move to the downside. So it's a 100% retracement of the last impulse, which is very, very deep. And if we're looking for any kind of pausing points along the way, well, maybe retest the prior lows, maybe a little bounce right here. But again, everything looks pretty bearish. If we do try to push up, I don't have any kind of supply overhead to hold us down, but I just don't see that happening right now. So let's go over to the leading market to the downside. That's the Russell. And looking at the Russell, again, we're going to start off in the big picture. And we're going to go to the continuous here just to get a better idea of what the heck is going on. And we'll start off with the fresh chart. So right now we do have a downtrend. We have lower highs and lower lows on the weekly chart. And that's suggesting that we're going to continue to move down. You can see our recent high here couldn't even get us above 60 on the RSI, and we went well below 40. That's extremely bearish. So on the weekly chart, this doesn't look like it's a good demand zone either. We had a little bit of pause right here. And that's already been tested. So we removed some of the buying pressure that was in that area. Not sure if it's going to be able to hold up very well if we come back down there again. As far as overhead supply, there's really nothing in this area. The first zone that we have overhead are these highs. You have rally, base, base, and drop. So overall, this is extremely bearish. Again, it's the leading market to the downside. It has made lower highs and lower lows, so we are officially in a bearish trend. And there is actually another demand zone I see right here. Kind of snuck in on us. Got rally-based rally at about 1807 appears. I also want to verify with the impulses down and correction. Looks like we paused, as a matter of fact, right here at this duplication of the previous impulse. Might be getting another correction going on here. So on this leading downward market, if we are correcting, let's see where we might pull back to before we continue down again. There we are. And you can see we've corrected almost to 50%, not quite. And we can go down to the daily time frame just to get a little more detail and see where there might be a supply zone for us. And the nearest supply zone is really right here at the 78.6. So we haven't gone back that far yet, but you can see we've got right here kind of drop, base, drop. I don't particularly like this. I mean, there is great selling pressure, but I don't like the fact that the leg out candle went above the basing candle. Usually those don't work quite as well for me. And we may end up stalling before that. As you can see, we're kind of in the middle of this 38.2% correction, but seem to be finding a little bit more weakness altogether. So I don't even see how we're going to get above that 50% up to 78.6. I just don't see it happening. We've got too much weakness going on. We did lose a little bit of weakness with a positive divergence. Notice there's the move to the downside. This is the positive divergence that warned that prices were going to pull back. However, as you can see, when we came back down, we made a low where the RSI actually was below 40. So it did not confirm trend reversal on the daily time frame. For a trend reversal on the daily, this would have had to have stayed above 40 as we made a low. Let's take a look at the actual contract just to verify. Yeah, and it's the same. So we have area supply right here. We don't have a supply zone formed yet, but we may be forming something. We have rally, base, drop, Only one new low, not multiple. So it's not actually a zone yet. I'm not going to mark it. Oops. Here we are. And we can go ahead and try to project where we might be headed for our next impulse down. And we'll have to see if we're done with our correction right now as well. And it looks like we started from right here, impulsing down. Oops, that didn't go. And there we are. And actually, you can see it's a 50% retracement that we have. 78.6 is also still within that area of supply, but we may have topped out here. You know, we did have the correction that was kind of warned about by that divergence. So you have the positive divergence telling you prices are going to rally. There they did. Here, we haven't quite formed a low yet because we do have this price low, but we don't know if we're going to go lower on the next candle or if we're going to break above the high of this candle on our Sunday going into Monday. So if we do on this Monday's candle break this high, we have put in a low that is actually still below 40. So that does not signal a reversal of trend. It just means that we're still correcting and we could move up just a little bit more, as I mentioned, up to either 61.8 or more likely this area of supply, 2120 to 2168, which is also that Fibonacci retracement of 78.6. So again, if we do break the high here, let's get the high number. 2014.1. If we make a new high without making a new low on Sunday going into Monday, then our target is likely to be up here around 2120. If not, if we end up breaking down to a new low, then look out below. We're going to keep pushing down most likely and head down to, what did I say, it was about 1807 on the previous demand. Well, we can actually just look at the extension, as I said. Yeah, I'd probably use this. Then we have 1862 and actually 1741. I don't think this lines up with anything in the past, so let's just verify that. No, you can see that we lose our data right here, so that's what I've got. Anyway, if we want to fine tune this a little bit more, we can actually drop down to the 4-hour time frame. Let's see what we find. And on the 4-hour, we actually do have a couple of zones a little bit closer. So as we zoom in, again, we got that daily zone right there, but at the 61.8%, we actually have rally-based drop. Kind of interesting. You can see good selling pressure coming out of that area. Might be a retest of some of this area, but this didn't really qualify as a zone because that closed above the candle. So this one actually worked. We had rally, one base, and then the drop right there with some follow through. So we've already pierced, obviously, this high. So, and we're stuck on another fib level. So if we do, again, break the high 2014, we may actually only retrace a 61.8% correction, which would give us 2076 as our next target. So if we open up on Sunday and Monday going above the 2014.1 without making a fresh low, if we break that line, then we're likely going right here to 2076. That's where we're headed. So we could we could take a look at the 60 minutes, see if there's anything there, but nothing else really. I'm still seeing lots of weakness. We try to rally up, but can't seem to get above 60. So overall, weakness in trend, we may be done. We may just end up going lower. If we do, now let's clean this up again. We've got a little bit of demand that we run into right here. Keep an eye out for that little bouncing point just below where we turned before. So if we start with an impulse down, we're likely to get a little bounce in 1952, but that would take out the daily low rather than the high, and we could possibly continue just maybe a little bounce here before going lower. So again, we've got two possibilities. Either we break down off Sunday going into Monday to take out the previous low, small bounce before going lower, or if we break the high that I had earlier from Friday's high, then expect the big rally. Moving over to the S&P. Start off on the weekly chart. And again, we are correcting. Now notice on the impulse down, we did not get below 40. When you take a look at the Russell, there you see we went below 40. That means we're in a bearish trend. On the Dow, we did not go below 40. That's actually still somewhat bullish. And again, it makes sense because that was the strongest market. we go to the S&P and the same thing. We did not get below 40 as we made a low back here last week. So, still some underlying bullishness. We're not ready for the big crash yet, potentially. Although, as we tried to rally, you could see we couldn't break our supply zone here. We have drop, base, drop that started forming. It was a good zone, too, because on that move down, we broke prior lows. And all we did was simply retest that area. So the S&P is saying that we are probably done with retracing. We can also verify by looking at the retracement values. And it wasn't exact. We were in the neighborhood of 61.8% retracement. Therefore, we're likely to continue to impulse down now. And looking at that impulse down, correction back up. Our initial target is the prior lows. After that, we're likely to continue lower to 3990.5. We can take a look back on the weekly chart. There's not really any kind of demand here at all. The first level of demand that we kind of run into, I would say, is this red candle, where you have rally, one basing candle that closes, and then slight rally up. And that's going to put you way back at 39.26, 38.51, just below the fib extension. I think the fib extension might work first for a little bounce. And of course, we may end up bouncing here at 42.18 before anything else. So it appears that we're going to continue to drag down by the Russell 2000. Dropping into the daily time frame, let's see if there's anything else going on here. If we're not done correcting and we do pull back a little more, again, you got to take a look to see what's going on with the current high on the Friday candle, 45.3250. If we break that, there may be a push to this area of supply, which is 46.06 to 46.7175. So we'll see again, if we break the high of 45.3250, expect this to go to 46.06 before we start to see our next little bit of weakness coming in. I didn't check, let's see. I probably need to go back to a daily. I was just trying to see where the Fibonacci retracement lined up again, if it did. And you can see, yeah, it's a little bit higher. So I don't know. We'll see. Now, if we break down below the low, 44.38 without making the high, that's where I expect this to continue down to the 42.18 pretty easily. We can go down to the 4-hour time frame, see if we can fine tune anything here. I don't think anything really changes too much. You have rally, base, drop. This part of it too. There you go. So the next zone up would be 46.3375. It changed just slightly from the daily when we go to the 4-hour. Again, that's only if we were able to break above 45.3250 without making a new low if you break out first. It doesn't look like that's going to happen. We've got some weakness coming in. So instead, you can see we tried to bounce off a little bit of buying pressure that was right here. Actually, yeah, rally, base, 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 and rally. So if we come back down, we should be able to break through all this sideways motion that we had. Really, we made an impulse correction. Kind of curious to see. Sure enough, look at that. Impulsed up, corrected down. And if that's the end, like I said, we may get that break of Friday's high. Our new impulse up can be measured for where our target's going to be. So if we can break out of the 45.32, look at that. Fibonacci extension takes us right to that projection area of supply. 46.33. So that looks pretty good again. Now we got to figure out where we can buy for the breakout. You could possibly buy the breakout of 45.3250 and then maybe put the stop 1 ATR below. Generally what I would look for. So if we go into the indicator and we can look at average true range. There it is. You can see we got 40.89 for the ATR. So basically what I would look for, I don't buy breakouts. I usually wait for a retracement first to buy. So if we break out of 45.3250, wait for it to retest it, buy on the retest, placing the stop, again, 40.89 below. So let's see, 45.32.5 minus 40.89. We're looking at a stop. I did something wrong. 45.32.5 minus 40.89. There we go. 44.9161 is what we're looking at. And I might as well change color so I know it's a stop loss. Coordinates was 44.9161. Obviously, we'd have to round that. And we got 44.9150 for our stop loss. So again, if you're looking at trading this on the breakout of 45.3250, you wait for the retest. Stop loss would go at 44.9150 while you go long at 45.3250, targeting just below 46.3375. And that would be target number one. If we can exceed that supply zone, which I doubt, but if we could, just before we reach the next area of drop-based drop supply, there is another Fibonacci extension, which would be your secondary target right here at 47.58. So we got possible targets on the way back up with a nice little small risk. Again, if we can break out at 45.32, so basically what I'm looking at is this. We open up on Sunday, we move upwards, break out. I wait and buy the retest of this area with a stop loss below, and then hopefully takes off. Oops, didn't quite catch that right. Hopefully takes off and gets our profits there. So that's what I'm anticipating as a possibility. The other possibility is we just don't get any kind of strength whatsoever. We open up and just kind of break down, and we saw our downside targets there as well. Lastly, we can go over to the NASDAQ. And once again, go to the weekly time frame. We'll clean up this chart. And we've had a pretty significant move to the downside. Now, this one's very close to a bearish trend. And the reason why, a little different than what we saw in the S&P, we actually have high, low, lower high, lower low. So we are in a bearish trend. However, on our move down, we did not go or stay below 60. So we were not able to get below 40. There's a little bit of underlying bullishness here in the NASDAQ. But not too much. As you can see, we held this area of supplies. We tried to retrace the most recent impulse down, which began in early January. So again, if I bring in my retracements, we didn't really stop at any of the measurements. Just kind of did it in the middle of nowhere. So if this is we're done with this retracement, we're likely to impulse to the downside, and we have to look back. There's no real demand anywhere nearby that looks enticing. So going down to the daily time frame, let's see if we got anything else. Yeah, we do have supply here. And did we tag that? We stalled just shy. Interesting. Yeah, drop, base, drop. You can see we reacted to that. Couldn't even get above 50, let alone 60. So we got a lot of weakness here in price. Once again, we just really got to kind of pay attention to what happens on Sunday going into Monday and see, are we able to continue to push higher? Are we going to break these highs? Or are we going to break the lows? And stop or take. There we are. So we're kind of watching this last candle to get an idea of which way we're likely to go. There is a little bit of bullishness because we couldn't get below 40 as we pulled back. So there's a possibility of pushing back up into that area of supply. Problem is, I don't know if we've got a good reward risk ratio here. So I'll probably just stay away from it, trade the S&P instead. I say that because even if we add in the ATR, it's probably going to be quite a large stop. You can see 478.88. So if you were trying to buy the retest of 14,825.75, you would look at 478.88, and that gives you a stop of 13,346.87. So once again, we change the color to know it's a stop loss. Use bright red this time. And I'm going to go in for the coordinates. We are looking at 14,346. That didn't take the decimal. There we go. So just below here, and you can see that's really not good. That's only about a 1-to-1 reward to risk ratio. So it's not worth taking that trade. So I wouldn't do it. Anyway, if we go down to a smaller time frame, just get an idea of what's going on here. I'd probably stay away from the NASDAQ and trade something a little bit easier like the S&P or the Russell, just because this isn't looking like it's got anything setting up really well. Now, if we start to find a little bit of weakness before we get up to these highs, it's interesting. So noticing that there's an area here of supply, but it has been tested. You can see that's what held us in the beginning of February to the downside. We actually even formed another little zone just a little lower here. You have drop, base, and drop. Oops, I wanted a template. There we are. So drop, base, drop. Not the best of zones, honestly. No, I'm not going to call that a zone because it doesn't have good movement down. So we don't really have anything to hold us down other than that higher time frame zone that we were just looking at. Yeah, I think I'll just stay away from this and play, like I said, the S&P and or the Russell because they give us a little bit better opportunities on the trading. So that's what I'm looking at on the equity markets. If you got any questions, feel free to let me know. Hopefully you enjoyed the video, and you can go ahead and hit subscribe and like the video so you let me know you liked it. That way I can go ahead and put more of these out there for you. And until next time, trade safe, trade well, and take care.